To get approved for a mortgage if you're a doctor, a vet, or a dentist in Canada easily. My name is Sean Rampersaud. I'm with the Mortgage Group. I've been a broker for 20 years, and today I'm going to be explaining to you how to get approved for a mortgage when there's all kinds of different sources of income when you're a doctor. If you're a doctor, dentist, vet, optometrist, or even a resident or someone on a fellowship, you may qualify for a mortgage that no one else qualifies for. You have access to special programs and privileges that no one else has, but you may not even know that. I'm talking about lower down payments, huge borrowing power, student debt exceptions, corporate income options, and special lending programs from major banks. But here's the problem. Most bank employees and most brokers don't understand these programs. They don't know who does it, how it's done, and most of their underwriting departments don't either. So a lot of people in your industry end up getting declined because of this, and it's brutal. It shouldn't be happening. I specialize in this type of financing. So what ends up happening is they get forced into terrible mortgage structures, or they get forced into lenders with really high interest rates, which we're all trying to avoid. So I'm going to break down how doctor mortgages work, how income is calculated, how student debt is treated, and the smartest strategies to take if you are in one of these positions. And at the end of the video, I'm going to explain to you the secret programs that are available to you that will give you up to $250,000 in income, even if you're first year, last year of student fellowship, or a resident. I'll also talk to you about what to do if you have bad or mediocre credit and how you can qualify for the lowest rates if you have that and you're a doctor. So, why do banks love doctors? Why do they come out with special programs just for you? It's because you're considered one of the lowest risk of default to lend to in Canada, actually, in the world. Banks know your income generally increases over time, your employment is stable, and the demand for healthcare workers is extremely high. So because of this, they have all of these special programs available to you. And that's for physicians, dentists, veterinarians, pharmacists, optometrists, chiropractors, even some regulated professionals. These programs allowed higher debt servicing ratios, lower down payments, special treatment for student debt, extended rate holds, and in some cases, approvals when you don't earn any income. So first, let's talk about the special medical professional programs that some lenders have. This is not every single lender out there. There are just a few that have this type of program. And this is a program for students, like fellowships, residents, students, people that are new to Canada. So if you were a doctor back in your home country and then you came to Canada, you did your upgrade courses, you haven't earned a dollar yet, but you're in your first year of fellowship or residency, then we can get you qualified for a mortgage. I can give you an income, literally. The program offers lower rates for medical professionals, so definitely you're going to want to call me on this so I can guarantee you those low rates. It includes no fee banking. It includes equity lines of credit, and some lenders don't charge insurance fees. So when you put 5% down, generally, they're going to charge you for CMHC fees or Sagen fees, mortgage insurance. Some of the lenders out there charge no mortgage insurance with as little as 5% down when you're a medical professional. It's crazy, and it's only for you. So they'll accept you even if you're in your last 36 months. Like, even if you've been a resident or a fellow for the last 36 months, and they'll project your income. So I did say earlier in the video 250K. 250K is the average income that they would give you. Even if you made zero, let's say you made zero and you're working in residency, but you're not making anything for the time being, they'll give you an income of up to 250K. The max income that they can give you, this is if you're in your third year, is 375,000. 375,000 is like the projected income, but they'll give you that so that you can qualify for a mortgage, even if you're making like way less than that. So we do use this program a lot for a lot of doctors. So the further you are in your career, the more money they give you, basically as income. but good credit is a must, and they're looking for anywhere between 5 and 10% down as a minimum to use this program. The next program I want to talk about is the high net worth program, because a lot of doctors, dentists, vets, whatever it might be, any type of specialist may qualify for this program. This is where you leave most of your money in your corporation, as an example. A lot of the gross income is left in the corporation, and but you have significant savings, and your savings is in the form of RRSPs and liras and whatever else is available to you. And there's a lot of different investment engines that are available specifically for doctors. But essentially, every dollar over 300K, they will lend you against. So let's say you have 300,000 in locked in RRSP, and then you have another 600,000 in, I don't know, a different RRSP or a mutual fund or a stock portfolio. Well, they'll give you up to that 600,000 in income to purchase a new property. So you can buy a property for 600,000 essentially, because you have that in liquid cash over and above 300,000 in savings. So let's talk about the absolute easiest one to get approved. These are for people that are salaried employees and they're working for a company. So not a doctor that owns their own company. This is for people that work for a dental office or work for the University of Alberta as a doctor. Normally, you'd be in a salaried position. So basically, what the banks are going to look for from you is they're going to look for an employment letter. The employment letter should state what your income is, that you're full time, guaranteed hours, and what your salaried amount is. Generally, on those types of employment letters, it doesn't take into consideration overtime income and bonuses. I know a lot of you get bonuses as well. So it doesn't take that into consideration. So you're also going to want to provide your last 2 years of T4s. What the bank will do is they will take an average of your last 2 years of T4s or your salary, one of the two, whichever one is higher. So if your last 2 years of T4s are actually higher because you've worked overtime or because you've got a bunch of bonuses, then we're going to use the last 2 years of T4s, because we're going to want to increase that income so that you can qualify for the highest amount. The bank will also consider your employment contract. So if you have a brand new contract, let's say $250,000 a year is your contract, then the bank will use the $250,000 as income, and they'll only do it for your industry. Other people that go on contracts, especially like a 1 year term contract, the bank never considers that their full income, because they need a history of that type of pay. So for you, if you have a contract and it's for $250,000 a year, they can do it right away because you're a doctor. But make sure you've got to have some decent credit in order to make this one happen. Now, if you're in your first year, make sure you reach out to me. The reason being is I do have those special programs available to you where I can give you a significant income. I know in the first year for most doctors, they don't earn a whole whack load of income. It's not normal, and the further they go into their career, generally your income level starts going up. But if you're in your first year or you're a resident or a fellow, call me, and I'll be able to increase your income even higher than what your base salary is. So if your base salary is $80,000, okay, for a first year resident or fellow, I can give you up to $250,000 as an income in order to qualify for your mortgage. That way you can get a bigger house. That being said, residents, students, and first year professionals, this is where these types of programs really shine. Most residents and students think, I have way too much debt because of student loans that I've incurred while I'm getting into this high position, and they also think that they're not making enough money to qualify for the house. So a lot of them just won't put an offer in on a property. Well, if that's the case, you're definitely missing out on getting into the real estate market now. But I bet you didn't know that the banks offer special treatment to you just because of your position. Some lenders will fully ignore your student loans in order to help you qualify for a mortgage. Others will calculate your debt servicing ratio differently than they do other professions. And other lenders will simply approve residents, fellows, and people in their first year of employment. If you're in one of these positions, first year or resident or fellow, definitely you're going to want to use the medical professionals program because the bank is going to take your base salary or the last 2 years of T4s, whichever is higher, as your income. So the medical professionals program is going to actually give you more income than what you would normally be paid. Now let's talk about our self-employed people. This is very common in your industry. So there's different forms of self-employed in your industry. Some people will start their own professional corp, and they may work from in different offices. So that's one form of self-employment. Another person might open up their own clinic and hire other doctors or contract other doctors to come and work with them. They may put those people on salary or they may contract them. If you're self-employed, what the bank is going to use is they're going to use the average of your last 2 years of business financials. And then they're going to say, okay, well, this is what his income is or her income is. But the best part about that is you get to write off everything. You get to write off your equipment. You get to write off your vehicle. You get to write off a portion of your house. If you deal with the right bank and you're a self-employed doctor, they can add a lot of these things back to your income. So you may only be paying yourself maybe $150,000 a year. So your last 2 years of notices of assessment would be 150,000 bucks. But you have the incorporation of your business and you have your business financials. They're going to take your gross income and they're going to use a portion of that income to add to your income so that you can qualify for more. So on paper, if you walk into the wrong bank and you're applying for $1 million mortgage, but you only make 150,000 bucks, you're not going to get approved. But if you get a bank that is on one of these medical professional programs, then they're absolutely going to take all of your different types of income and factor that in back into your income to help you qualify for more. So I did one the other day for a customer. He was only showing about $75,000 worth of income. This person was a dentist, and he was buying a property, 1.5 million, putting 10% down on the property. And what ended up happening is he walked into his bank. He was declined right off the get-go. And then he came and saw me, and I said, okay, well, where's your last 2 years of business financials? I found out that this guy was grossing like $6 or $7 million in gross revenue from his clinic. And because of that, I was able to add back around $350,000 more to his income. And then I was able to get him approved for that mortgage. So you need somebody that knows what they're doing and how to dissect the type of income you are earning. And unfortunately, when you walk into the bank, most of the bankers are not going to know how to do that. By the time they know, they become mortgage brokers. There's another program for self-employed people that I want to talk about, and that's also called the stated income program. The stated income program is available to you if you're incorporated. So just like what we were talking about before, but essentially what they do is they'll look at your line 150, your gross revenue, and you're gonna be able to state your income within reason. So say for example your gross revenue is $3 million. Okay, it would be very reasonable to say or state that your personal income is $300,000. Banks will accept this in your industry. So if you own your own clinic or if you're a professional corporation, we're going to ask for your last 2 years of business financials. Absolutely. We're going to ask for your notice of assessment to show that you have no taxes owing to the bank, so that you have no taxes owing to the government. We're going to ask for your incorporation documents so that we can make sure that you're a 100% shareholder on the business. If you're a 50% shareholder, then you can only claim 50% of the income. And I'm going to look at all of that together and I'm just going to start adding things back to your income. I'll add retained earnings back. I will add office rents back. I will add a portion of your house back to income, your mortgage. Structure absolutely matters. So let's talk about some of the common mistakes that most doctors make when they're applying for a mortgage. The first one is going directly to a bank, okay? Walking into a bank, they're going to pull your credit And every time you pull your credit score is going to drop a little bit. If you get somebody like a new person, it could be a disaster because they're not going to know how to run your application. It's much more complicated than that when you're a doctor. And if they don't have the medical professionals program, then that bank should be totally out of the question anyway, because they absolutely won't understand. Mistake number two is not knowing or understanding how corporate income works. So, you're going to pay yourself, you're going to pay your employees, you're going to pay for equipment, you may have leases, you're going to pay for vehicle, you're going to pay for phones. But there should be some retained earnings in the business, after the year is up. So some of the retained earnings we can add back to income. Some banks just won't understand that. The next mistake is ignoring your student debt. So the student debt for a doctor can be significant. If you're financing all of your schooling, after your first 2 years of work, then your repayment's going to start. The payments can be huge. So it's important that we deal with a bank that will remove that student debt from your debt servicing ratio, and not every bank will. I teach a whole bunch of professional strategies for professionals like you. We talk about some programs like, for example, like the Smith maneuver, where we can write off a portion of your mortgage because you're a business owner. We talk about using professional lines of credit strategically and using your corporate retained earnings for something related to real estate. And we also talk about the Manulife One program where they have re-advanceable mortgages. So every dollar that you pay off, more money becomes available to you at a very low interest rate. So using the property you buy as a tool for business. So if you're a doctor living in Canada or a dentist or a vet, please give us a call before you go out to apply for a mortgage. It will save you a ton of headache. In the end, you would finally have to find somebody like me that really understands what you do and how you do it and how you're paid so that you can qualify for the best mortgage available. Everybody wants the same thing. You want lowest rates, you want an easy approval. You're a doctor, you're busy, you don't have time to deal with bank to bank to bank. I go and shop every bank for you anyway, find you the lowest rates and find you the best product for what you're doing. If you like the video, please like and subscribe to the channel. My name is Sean Rampersaud. I put all of my contact info in the description below. Thanks.